when you take, how much of the real economy today is still requiring digitization, starting with financial services, something that my company is at the heart of, there's still enormous amounts of processes, activity, people-driven activity that needs to be digitized. And that, whether it's localized in one market, like in mainland China, or globalized across other regions in the world, we're still at the early stages of this.
Akash, Mandy joining in on the conversation here. A moment ago, we were talking about cryptocurrencies, and BNY Mellon really made headlines when, despite the fact that it is the US's oldest bank, was actually one of the first traditional banks to embrace digital currencies like Bitcoin. Gradually, one by one, we are seeing these big traditional lenders, like CBA, largest bank here in Australia, announcing that's going to be trading crypto just a few weeks ago. But why do you think it's been so slow for these banks and other financial institutions to uptake cryptocurrency?
So, Mandy, we look at crypto as part of a broader evolution in the world of DeFi, right? And here, it's cryptocurrencies as a store of wealth. I think one of your prior presenters and you talked about as an alternative to gold. We think about stable coin as a method of payment, both for institutional or institutions and for individuals. And then we think about the broader world of tokenization, which we're still in the early stages. I mean, all of this innovation has really just happened in the last several years. And while banks are figuring out their own speed of embracing this, I think the receptivity to start looking at the underlying technology and how it could be incorporated into the banking system is continuing to grow. So I'm relatively positive that this will continue to be part of our banking and financial markets in a thoughtful, regulatory compliant, and safe way over the next few years.
So how do you see blockchain as contributing to that evolution of the capital markets you were talking about?
Well, one of the biggest trends in capital markets, which I think this structural change is accelerating, is the rise of the individual investor, and through that, the importance of transparency. Ultimately, we want a financial system where your money is, why it's there, how much you're spending to invest that money becomes more and more transparent. Blockchain as a technology still has a ways to go, but what it does do is create more market transparency of where assets are, how easily they can move, who owns them, and ultimately reducing the frictional costs of that movement in a global economy.
I mean, certainly transparency is one of the tenets of having confidence in the capital markets, having the confidence to invest as well. But regulation is another. And regulation seems to have really been behind the 8 ball when it comes to cryptocurrencies, right? Where do you see the future of regulation in this?
So when we talk to central bankers and other regulators around the world, one thing that gives us quite a bit of positivity is the amount of intellectual capital that's going into understanding the underlying technology, understanding the effects it has on investors, both institutional and individuals, and a real concern ultimately for the safety and soundness of our financial system. And so I believe that anytime when you put that much time, energy, and the right people at a problem, you tend to get to the right answer over time. And that is one theme I could say across every major central bank that I've seen over the last year. A real sense that we're going to look into this. This is not a passing fad, and we're going to make the most of it of incorporating it into our banking system over time.